Okay, last one, fourth video of topic 6. Let me share my screen. And we're going to be talking about the operational risks that the crypto asset ecosystem is subject to. And a lot of this happens on the centralized exchanges, also decentralized exchanges, but less so. So here's January this year, April this year, October this year, some Cointelegraph. I do like their cartoons, by the way. They always have the same sort of layout, which makes this look rather nice. So in January, they had an article, the most significant hacks of 2019, new record of 12 hacks in 1 year. In total, over $292 million was hacked and over 500,000 pieces of customer data was stolen. And these were all from the main cryptocurrency exchanges as well. And here's another one, the DDoS attacks on Binance. I'll talk about DDoS attacks. They happen quite commonly as well, forcing the exchange to close and not take any new orders. So Binance was subject to a very large one in April this year. Not just one of them, but many of them. And its founder, CZ he's called, tweeted explaining that there was just a small lag or interruption of network access and nobody had to be concerned. The only problem is that these DDoS attacks can be accompanied with price manipulation strategies, as we shall see. And this is just from last week. Bitcoin and OKEx, that's the exchange's reward for trading on OKEx. They suspended withdrawals because there was a fraudulent trader working on the exchange, one of the market makers, or some, we're not entirely sure yet whether it was somebody in the board quite high up, or whether it was somebody lower down in the organization. But anyway, it had to close, suspend withdrawals, and then it's opened again now. So let's go back in time. Mt. Gox. This is rather a nice picture. This circle shows the volume transacted, and what happened was that there was a hack, and then the price plummeted. And unfortunately, there were a lot of stop loss orders that were triggered, plunging the price even further during the hack. So the Bitcoin price went down to 0. So what is the Mt. Gox? Well, what was the Mt. Gox exchange? Mt. Gox stands for Magic the Gathering Online Exchange. It was actually an exchange for trading playing cards based in Tokyo. Started in Japan in 2010, and apparently this game, Magic the Gathering, had some playing cards that could be traded for quite high amounts. So on June the 19th in 2011, an attacker hacked into the Mt. Gox computer and transferred Bitcoin into their wallet. And I showed you that graph previously. The price fell to 1 cent, but it was readjusted back up in a few minutes. Accounts with the equivalent of more than $8 million were affected, but that didn't affect the trading, because Mt. Gox was the only exchange that traded Bitcoin at that time. And by 2013, it handled approximately 70% of all the Bitcoin transactions, the rest being on-chain. And then in 2016, a startup called the Decentralized Autonomous Organization, DAO, that was one of the largest ICOs on Ethereum. It raised 150 million. I think I mentioned it in the previous topic. And there was, so it was a decentralized autonomous organization that takes in funds, and then if you buy the DAO, then you are entitled to vote on the funding of projects that it does. Okay, so it would fund blockchain startups. So everything was done on a smart contract on Ethereum, but the trouble was that there was some bad code on that contract. And it wasn't a conventional hack because an anonymous hacker just exploited that bad code. So, you know, it was fair dues, really. And they drained 60 million worth of Ether very fast from the DAO. Here's a nice video that is a commentary of the event. Is it? Yeah, here we are.
So people, something horrible happened. The DAO got hacked, basically. The DAO is leaking money, or F. So the DAO is being attacked. Official messages. It's going on for a long time now, and it's tracking leaking F, basically. So the Ethereum is gone, which is the value that gives the DAO its monetary value. Here's the message that people can help. If you're technical, if you have a Mac, which I don't, you can try to help block the Ethereum network a little bit, but I don't see how that will work. You can vote on some proposals to help. Well, this is all technical. Ethereum price is dropping very, very hard. My advice is to sell now. Really sell now. It's still at 16 plus, luckily. It's going down. Bitcoin seems to be stable. I'm not sure what that will do, but I'm scared. I'm just taking everything out, I think. If you want to see what's happening, the DAO. So this is what's happening. Someone is leaking, getting Ether from the DAO, and as you can see, it's a huge amount. Every 2 hours or every so much seconds, there's 285 Ether getting out of the DAO, and it's going on for hours and hours, and it's horrible. It's dropping like a rock, so I'm stopping. Sell.
So whoever did it actually gave the Ether team a tip, because Vitalik Buterin stopped, he reversed the blockchain. He did a hard fork and wound the blockchain back to the time before the hack, so people didn't lose any money. But not everybody agreed that this should be done. And so that's how the Ether Classic token was born. And the hacker gave the development team a tip for that. 2016 Bitfinex hack, and more recently in July, $30 million of the Bitcoin stolen in that hack started to move. So they transferred roughly 38.7 million, the 1.3 billion worth of Bitcoin was stolen. And so they're on the move. The whale alert, you see whale alert here, is tracking those Bitcoin. So there was the hot wallet on Bitfinex. The problem was there should have been a multi-signature system for sign-off of any transactions, and the hacker found keys to sign off of fraudulent transactions, and Bitfinex hadn't really followed the proper protocol. It didn't use the normal multi-signature system. So that was a flash crash in Bitcoin that was caused. So how did Bitfinex deal with this? Well, they just basically took 30% of all their customers' balances, and in return issued a new exchange token. It's called BFX, in proportion to the amount that they took. And then they told customers the token was like a share in the company, and if they wanted, they could sell it to them to get their money back. So that was what we call the Bitfinex solution. And now let's go on from hacks to distributed denial of service attacks. So these are used all over the internet. It's one of the reasons why the internet's broken. It happens on your banks. Sometimes your bank goes down. I wanted to have a look at the university pension fund, and that was probably being DDoS attacked at the time because it wasn't working properly. Anyway, so a DDoS attack is a way of disrupting a web service, making it unavailable, because what happens when you've got a DDoS attack is that the attacker is scanning the website, looking for data vulnerabilities, trying to grab data, your bank account details or something like that. And it requires the attacker to gain control of a lot of computers and turn them into bots. Usually that's done with some sort of phishing or malware infection. You know, if you get a virus on your machine, that your machine could be taken over and turned into, you don't even know sometimes that it's happening. And your machine would be turned into a bot that would then flood the target server with traffic and make it impossible for the server to operate. Now, I mentioned before that a DDoS attack could just be scanning for vulnerabilities, looking for a way into the hot wallet or something like that. Or it could be a way of implementing a price manipulation trading strategy. So how this works is that the attacker, the DDoS attacker, places a very large sell order on the exchange and then launches a DDoS attack, preventing other trades from coming in. So the order book is sort of frozen. And the large sell order is then filled with the existing bid volumes in the order book. So it's just a market sell order, and it will eat up down through the order book. Whatever the market price is, it'll eat it up. So this creates a downward price pressure. Things like stop losses and other good till cancelled orders will remain, and they'll continue that downward price pressure. And no new bids are arriving, so the price is going to drop and drop. So you get this spiral of downward prices, just as we saw at the beginning with the Mt. Gox exchange. And then when the attacker stops the DDoS attack, so new orders start coming in, the attacker can then buy a very large position, as big as the position he sold, at a very low price. So he's end up with exactly the same number of Bitcoin, or whatever it is, whatever coin they're doing this on, but just making a very huge profit on it. It's like a sort of massive repo. Here's an example recorded on the Kraken exchange. This is by an alumni of Sussex, David Toomey, who I work quite closely with, and his co-author, Andrew Mann. They wrote a chapter on corruption and fraud in cryptocurrency markets for my book, Corruption and Fraud in General in Financial Markets. And they show the volume going up just before this DDoS announcement. And then a big buy order here, a big sell order here, and then it eats through the book, and then a big buy order here when it goes back to the other price. So more recently, we've had quite a few attacks, DDoS attacks on Poloniex. They've been subject to lots and lots of DDoS attacks. So 2017, Poloniex under severe DDoS attacks again. So these, in 2017, there were a few attacks where withdrawal requests were automatically processed. On average, the clients in Poloniex lost about 100 Bitcoin each. So Poloniex reinstated the customer accounts, but then they had to increase their fees to cover the funds. OKEx Frauds, 2018, 2020. So this going back to 2018, the founder of OKEx was detained on crypto fraud charges in China. Starzu is the founder of that exchange, and then arrested again in 2020, having changed his name to Mingxing Zhu, also known as Starzu. And then this is from the Financial Times just recently. Crypto exchange OKEx halts withdrawals in China probe. The OKEx group says that an employee holds the exchange's the private keys to the multi-signature wallet, and they have lost contact with that person. So there's a government investigation going on. Now the CFTC, Commodity Futures and Trading Commission in the US, are beginning to get involved. Just recently, they charged BitMEX with illegally operating derivatives exchanges. That's because the Lightning Network of Bitcoin, the BitMEX Research Lightning Network has a lot of suspicious activity going on. Virtual private networks are being used by large American banks and hedge funds to trade on BitMEX. And BitMEX are allowing this to happen, even though US citizens are not allowed to trade on these unregulated exchanges. They can trade on Coinbase or Gemini or even Kraken, I think, some of the US exchanges, but they're not allowed to trade on these token casinos or zero fee exchanges. And a lot of these derivative exchanges are totally banned. And BitMEX has got this massive perpetual swap. It's traditionally, for the last 4 years, it's been a main price leader. The main way that you can manipulate Bitcoin prices is through manipulating the perpetual swap. Of course, BitMEX denies that it has done anything wrong. We strongly disagree with the US government's heavy-handed decision to bring these charges, intend to defend the allegations vigorously. But anyway, this is an ongoing, this is a civil action because the CFTC can't subpoena them because they're domiciled somewhere in, I don't know, the Cayman Islands or Hong Kong, wherever they are at the moment. But BitMEX is still operating. I just showed you the BitMEX exchange. I showed you the perpetual swap. So you saw all the spoofing that was going on there. Anyway, all right, so that's enough for this topic. Hope you enjoyed the lectures and see you in the next one, which is all about derivatives.